New York is on fire right now. The Knicks are in the NBA Finals for the first time in 27 years. Wu-Tang is courtside. Spike Lee is holding court. Walt Frazier is calling the games. The whole city feels like it belongs to us. But here's the question nobody is asking. Does it? New York City's mayor's office estimates the Knicks Finals run will generate $465 million for the city's economy. The question Black Wall Street Odds is asking is not how much money this moment is generating. It's who is positioned to capture it. Let's start with the numbers, because this is a financial channel, and the numbers tell a story that the sports coverage never will. Madison Square Garden Sports, ticker symbol MSGS, is the publicly traded company that owns the New York Knicks. As of this recording, MSGS stock has surged 49.3% year to date. It hit an all-time high of $397 per share on June 12, 2026. The market cap of the company that owns the Knicks, $9.3 billion. Analysts at Seaport Research project the Knicks playoff run alone will generate an additional $145 million in revenue for MSG Sports. Each Finals home game at Madison Square Garden is worth an estimated $20.3 million in revenue. A single game, $20 million. In one night. Guggenheim Securities raised their price target on MSGS to $470 per share with a buy rating. Analyst price targets across Wall Street range from $429 to $865. Morningstar's fair value estimate, $865 per share. The stock is currently trading near $384. You do the math, and here's the piece that could change everything. In May 2026, MSG Sports filed to spin off the Knicks and Rangers into separate publicly traded companies. A standalone Knicks stock on the New York Stock Exchange during a championship run. 53 years in the making. The Knicks are about to become one of the most valuable standalone sports assets in public market history. The cultural moment generating that value is black. The ownership structure capturing it is not. That gap between who creates the value and who captures the value is the entire BWO story. And today we're going to tell it. To understand what's happening right now, you have to go back 53 years to the last time the Knicks won it all, Walt Frazier. Clyde, one of the most stylistically influential figures in the history of New York black culture. His influence on fashion, language, and urban cool extends so far beyond basketball that most people who've been shaped by him don't even know his name. Frazier understood something most athletes never do. Brand is an asset. He invested in real estate. He built a broadcasting career. He licensed his image and his name. 50 years after his last championship, Walt Frazier is still generating income from the cultural equity he built as a player. That is generational wealth architecture. And it's the model every black athlete should be studying right now. Then came Patrick Ewing, Charles Oakley, John Starks. A generation of black excellence that made Madison Square Garden the most famous arena in the world. Their labor, their talent, their cultural identity built the brand value of a franchise now worth approximately $7 to $8 billion. None of them own a share of it. And now Jalen Brunson, the son of Rick Brunson, who played in the NBA without accumulating generational wealth. One generation later, his son restructured his own contract, voluntarily took less money, to give the Knicks cap flexibility to build a championship team. That loyalty is being celebrated, and it should be. But the BWO question is, was it reciprocated structurally? Did the owners restructure their ownership in return? Or did they simply benefit from it? From Frazier to Brunson. 53 years. 3 generations of black excellence. One ownership structure, the Dolan family, whose net worth is estimated at $4 to $5 billion, substantially built on black athletic performance and black cultural identity. Let's talk about who's actually in the building, because Wu-Tang Clan sitting courtside at Madison Square Garden is being covered as celebrity gossip. That is the wrong frame entirely. Wu-Tang Clan is the most sophisticated collective business structure in the history of hip-hop. Full stop. Each member maintained individual recording deals, while the collective maintained group brand sovereignty. That's a decentralized ownership model that predated the entire creator economy conversation by 2 decades. They built it from Staten Island public housing. No label infrastructure, no corporate backing, no inherited wealth. Then in 2015, they did something no artist had ever done. They recorded a single album, pressed 1 copy, and sold it as fine art for $2 million. When the buyer was imprisoned, the government seized the album. A collective called Pleasure DAO eventually purchased it for $4 million. A hip-hop album treated as a museum piece. That is a cultural asset trust. That is Prince's vault logic applied to music. The Wu-Tang brand in 2026 is worth conservatively $50 to $100 million across merchandise, licensing, streaming, film and television rights, and cultural equity, built from nothing over 3 decades through collective ownership and brand discipline. That's the model. That's the blueprint. And it's sitting courtside at Madison Square Garden, while nobody explains what it actually represents. Door number 1, MSGS, Madison Square Garden Sports Corporation, ticker symbol MSGS. This is the most direct way to own equity in the New York Knicks right now. Analyst price targets suggest meaningful upside, particularly if the Knicks win the championship and the Knicks spinoff proceeds as a standalone public company. The spinoff alone could unlock significant value that the current bundled MSGS structure obscures. Door number 2, GOLS, Gabelli Opportunities in Live and Sports ETF, ticker symbol GOLS. Launched in January 2026, this is the first ETF specifically focused on sports investment. It holds positions in MSG Sports, the Atlanta Braves, Formula One through Liberty Media, and Manchester United. If you want diversified sports exposure, rather than concentrated Knicks exposure, GOLS gives you the basket. It's the pick and shovel play on the entire sports economy rather than a single franchise bet. Door number 3, TONT, Big 3 Basketball Holdings, currently trading as GRAF, ticker symbol GRAF. Ice Cube's Big 3 League announced a SPAC merger on June 12, 2026 that will convert Graph shares to TONT shares when the deal closes in Q4 2026. This would make Big 3 the first publicly traded professional sports league in American history. The 2028 Los Angeles Olympics, which include 3-on-3 basketball, represent a growth catalyst not yet priced into the $290 million valuation. This is a higher risk, higher reward speculative position. Understand the SPAC mechanics before you invest. Understand the redemption right that protects your downside, and understand what it means for a black founder to take a black-founded league public in a way that lets the community own a piece of it. Here's the number that should matter to every black investor. The NBA is approximately 74% black players. It generates approximately $10 billion in annual revenue. The ownership of that league? Approximately 97% white. That ratio has barely moved in 50 years, despite the league's explicit efforts at ownership diversity. Despite Michael Jordan spending decades as the only black majority owner, despite 12 black investors currently holding minority stakes, the gap between black labor contribution and black ownership in the NBA is the widest wealth gap in professional sports, and it's sitting right in front of us dressed up as a championship celebration. The NBA expansion into Las Vegas and Seattle represents the largest wealth creation opportunity in professional sports history. 2 new franchises, estimated entry fees of $7 to $8 billion each. A total wealth creation event conservatively estimated at $20 billion for current NBA owners. Magic Johnson is reportedly in conversations about a Las Vegas expansion bid. That's the right move. But Magic Johnson is one person. The Wu-Tang model says, what if it was a collective? A single private equity fund can now hold up to a 20% stake in up to 5 NBA teams. A black-led sports investment fund, structured like Wu-Tang, pooling capital from black athletes, entertainers, institutional investors, HBCUs, and community capital, could acquire meaningful equity in multiple NBA franchises simultaneously. It has never been done at scale. The legal pathway exists. The capital exists. What's missing is the structure. What's missing is the collective. What's missing is the Wu-Tang math applied to sports ownership. Spike Lee has been the Knicks' most famous fan for 4 decades. He is perhaps the single most valuable unpaid brand ambassador in NBA history. His courtside presence has been worth incalculable marketing value to the franchise, to MSG, to the NBA brand globally. Spike Lee does not own a single share of the New York Knicks. That's not a criticism of Spike Lee. That's a structural indictment. The next Spike Lee, whoever that is, should negotiate equity, not access, equity. From Frazier to Ewing to Brunson, from RZA to Jizza to Ghostface. From Spike Lee to the next generation of black New Yorkers watching these finals. The culture that built Madison Square Garden's identity deserves to own a piece of what it built. The doors are open right now. MSGS, GOLS, TAUNT, the Wu-Tang model, the collective structure, the NBA expansion opportunity. The culture is already there. The question is whether the capital follows. The win is cultural. The work is economic. The goal is generational. This is Black Wall Street Odds. And we go deeper.